Jay Ireland, CEO of GE Africa, nice to see you once again.
Yeah, nice to see you as well.
You're here at an Africa Investor Summit taking place at the NASDAQ. GE's already committed billions to investing in Africa. Where are you on the progress? Give us a report card, if you will.
I would say that, over the last few years, we've continued to increase our investment. We now have facilities in Ghana, Nigeria, Angola, South Africa, ones that we've built previously, as well as ones we've built subsequent to the last conference in 2014. We brought probably close to 5 gigawatts of power onto the grid around the sub-Saharan region, and we've continued to hire. We're up to almost 3,000 employees. So we've really been continuing to increase our footprint. We're very committed.
What's the biggest challenge to executing the plans, whether that's manpower or resources in another way?
It's a combination of a bunch of things. The first one is probably skills, okay? Having the right amount of people with the right amount of skills. So we're investing a lot in some skills building capability with universities, with other areas, and training. So that's one key thing. The second one right now, quite frankly, is you're in a down cycle. Commodities, oil prices. So getting the money to invest in projects and things are now, it's a long term, you're going to go through these cycles. So that's one thing that we're continuing to work with. And as a result, the investment wasn't flowing as easily as before. So other companies building out the supply chain, doing those things. So I would say those are the two biggest things, and it's just a question of time. I think the expectation level of what can get done in amount of time is probably a little optimistic at times. Way over optimistic when things are good, and more pessimistic when things are bad.
How hard is it to try to get investor interest around the world in Africa? You're at this conference today, but it doesn't seem to be top of mind for a lot of fund managers.
Right. I think it's a combination of a couple of things. It is difficult, and it's a question of the view of risk in investing versus the opportunity. And I think a little bit of that, it's probably skewed more that the risk is greater than the opportunity, or perception. When in reality, it's probably the opportunity is greater than the risk when you look at globally about what you're trying to get as far as returns. If you want a 2% return that's safe, plenty of places to do it in the developed markets. But when you want, when you're willing to take a look at trying to double or triple that return, there's other areas to do it, but there's also ones in Africa that have been, whether it's project finance, funds, et cetera, that are investing in infrastructure has really been the way to go. Public equities is a little hard because of the thin nature of the markets, and they get whipsawed so much.
But it is hard, isn't it, for people to have such a long-term horizon? I mean, GE's been around a long time, so in some ways maybe it's easier for a company like yours, but for some of these managers who've got to, show that it was worth the risk they're taking.
Yeah, I think the question is the ability of getting a return, but the other piece is the ability of exiting, depending on what their fund structure or whatever their investors are asking. So I think having that capability. So I think partnerships are very important, making sure you have the right partners that know who the people are and where to invest in Africa. And then the ability, again, making sure the expectation levels of the investors match what the investment is that they're investing in. So I think, we've seen over the last 8-9 years all kinds of investment issues, whether it's '08, the internet, et cetera, all the different bubbles. So that's going to continue. So I think it's just a continued understanding and more knowledge that they gain.
Is there anything the new president should do or not get involved at all in terms of trying to promote Africa for U.S.
The new U.S. president?
The new U.S. president, correct.
Look, I think global trade is absolutely critical for the United States. We're a big company, we're a multinational, 70% of our revenues are outside the United States. Global trade makes sense, and most of our employees are in the United States. So that aspect is a strong aspect. Africa is a piece of that, and when you look at the other aspect of economic diplomacy, whether it's China or India or South America or whatever, investing in Africa, that's also a real value for any kind of company that can export products in there.
So you would not want to see trade agreements renegotiated?
No, I mean, look,
political.
I think there's a normal cycle of how they go. And I think from that standpoint, you know, they're all always put together to make sure that there's equitable capabilities.
Jay Ireland, it's been nice speaking with you
Sure.
again. Thanks so much.
Good to see you.
Good to see you too.
Doing business in Africa. You can't afford to be without Africa Investor.